I just saw a video on TikTok of this guy making $30,000 in like the trading view trading thing. And then the next slide was 18 grand, and the next slide was 8 grand, and the next slide was 3 grand. And I was just like, holy, and the entries were dead perfect. But his strategy, I couldn't understand it. I didn't know what he was doing. Everything looked kind of complicated. And I just told myself, man, is it even fucking worth it, bro? I've been doing this for 2 years. And I still have not made any money. But I think, to be honest, I think I wouldn't say it's the fun part, but I think the fun part would be to see myself. Actually, no, the fun part would be to keep going and, to get a little money. Not so fun part would be to quit now and have nothing to do and watch other people succeed, knowing damn well that I could have succeeded too. So, this is not going to be a trade recap. We didn't take a trade today. As you probably saw today, we had federal funds rate, and we also had FOMC where Jerome Powell was speaking. That actually hit way harder than CPI. I just want you to note, like, this was CPI. Actually, we could take this whole thing, copy, paste, and we'll take this. So that candle right there was CPI, and this is federal funds rate. That is a huge difference. That is huge. That means that today we had probably the most impact on the market. On the 4-hour was just straight bullish. If we look at the daily, also just straight bullish. The weekly is even more bullish, right? And we passed not only that first monthly swing low, we didn't even react off of that. Then we had their second monthly swing high, or swing high. And then we're now at this daily fair value gap that I've marked out here. And this is the swing high of that fair value gap. So there's a lot going on. I can tell you that. A lot going on. But what we're going to be focused on today is I just want to show you off. I just want to show off the standard deviation that we applied on Monday. So not yesterday, on Monday, when we took our trade on, when we took our trade on Tuesday, we had the standard deviation up on Monday. And I just want to show you how that played out. Because as you can see, yes, there might have been what's called news, right? But our take profit got hit and went a whole lot higher than that. So let's go over what happened and why it happened. Actually, I feel like I'm missing. And that's what it is. So it's the 3 and then the 3.5. I know it was missing a level. I feel like the 1.5. Oh, they're all different colors. Why is this one lighter? I don't get it. Whatever. Shit. Motherfucker. My bad, guys. Just fixing this up. All right, cool. So, yeah. So what happened? So, let's go. Obviously, we're in the 4-hour, and I want to implement this in my strategy. The only thing I don't have in my strategy is when to look out for the market structure shifts. Obviously, what does ICT teach, and what everyone should probably know is that the higher time frames are more likely and are definitely going to give you the direction of the market, right? You cannot give you can't tell direction off the 1 minute chart. Like if I go into the 1 minute chart right now, can you tell me if the market is going up or is it going down? You can't really tell me. I mean, yeah, it's going up, but you can't really tell me from like a chart like, I don't know, let's try to find like this, for example. Is it going up or is it down? You don't know because you don't know what's up here and you don't know what's down here, right? It looks like it's going up. Sure is. But maybe it could, come back down. The 1 minute, like, there's market structure shifts everywhere. There's breaker structures everywhere. There's fair value gaps everywhere. It's not reliable. The 1 minute isn't reliable for bias or, big moves. What is, in my opinion, is the daily. The daily and anything above higher, right? Now, the thing about the daily is it's small, but it's big, if that makes sense. It's a big time frame when you really think about it, but it's small because it doesn't have it doesn't show everything. So here, right, I didn't see a market structure shift happen here, right? But when you go to the 4 hour, it's kind of clear. It becomes a little more clear. So it's like the day, but just a little few hours off, right? And you could easily see that market structure shift. You could easily see this. You could it's easily spottable. If I go to the 1 hour, right, that's also spottable. It's less, right? So it's less impactful. And the 4 hour also lets you see what those highs are. And those are big highs because that's a high that's been created and that stayed there for multiple hours, right? Even that swing low too. So I got to figure out how to implement my into my strategy. I got to figure out how to implement like which time frame I take my market structure shift on. I'll have to back test that. I guess that's the new goal is to back test, but let's delete this. So yeah, we have the market structure shift here, right up here on that high, the OT entry, we'll talk about that, and then standard deviation. So let's jump into this. Okay. So just so we understand, right, this was the 4 hour market structure shift that happened here. Okay. And this was the swing low that happened. Okay. That was the swing low that we made or whatever. Now, this swing low happened because you guys remember there was a 15-minute, what's it called? 15-minute fair value gap. Let's see if we can find it. Not even. I guess it was the order block. There's an order block here. Or was it the 15-minute or the 5-minute? I can't remember. Looks like it. Okay, 5-minute then. All right, whatever. Doesn't really matter. We already took the trade. We already have our entry. Anyways, this 1 hour fair value gap also works. That's pretty good. The reason why we didn't use this one is because that one was already being traded through, right? Already got traded through. So that was not being used. But it did close. I do want you to notice it did close above it, right? All the price action closed above this other 1 hour fair value gap. So that's also bullish price action. So anyways, we have that market structure shift happen on the 4 hour. Then you can drop down into the 5-minute, whatever, this and that. And this actually went, if you guys remember, this actually went overnight. The shift happened on Monday, right, with this bullish displacement. But the actual swing high that was made, the full concrete one, was made on CPI on Tuesday. So it took a whole day for this displacement to happen. But still, I drew the OT. So from the most recent swing low that didn't get taken out to the most recent swing high that didn't get taken out, right? You draw the OT and that takes you right here. Okay, and we can draw just a little more right here. Okay, so that was that. And then, right, what I want to do now, if I'm going to take a position, I want to do the standard deviation. Now, the thing I like is these, okay? Notice how this move isn't big at all. Yes, on the 1 hour, it is big. It's from, we lost. Yeah, it was basically almost a $2 move. So we lost a lot, but notice how when I drew my standard deviation, maybe it seems big, but to me, it seems realistic because on the 1 hour, CPI already got all the way here. So we know that if this gets bought up, it's at least going up here. So we at least know that our profit target that we usually even in our strategy, is already going to get taken out because that's our first, like maybe first or second take profit, because we know it's going to take out those highs. It's obvious, right? If it's coming back from CPI, we know it's taking out those highs. Maybe not that the day of CPI, but maybe the next day or after tomorrow, whatever. So we know that's already done. And so with the standard deviation, I was confident that it at least went up to these levels, if not higher. It was obvious. It's so repetitive that I've seen it so many times. It's obvious. Now I'll give you a scenario. What if, and this is what I don't like, if the market structure shift happened all the way up here? What if it was like a big move like this? I'm just saying, for example. See how big it got? Look how big the levels got. That means that your little market structure shift, maybe not this big, but you've seen moves that go up here. Like you've seen, like I want you to imagine that this high is up here, right? So it's a big high and we just took it out. That's a big displacement down to create that, market structure shift. Sure, if the OT hit, it's fine. But that to just target the 2.5, you'd be waiting for basically 3 days. I don't like holding a position for 3 days. You know what I mean? So I like seeing this. I like seeing these small moves because it's predictable and the standard deviation gets smaller. Obviously, right now it looks huge, but when you compare it to what just happened today, I think it's pretty credible that it works and that the -4 was not a dumb play to hold all the way to. And even this, like, even if you targeted everything, so targeted from here to here, this is kind of a dumb one because you're targeting the high up here. The -2 to -2.5. Whoops. Kind of messed that one up. The 3 to 3.5. You see these areas? I mean, I'm not lying. Like, I'm not faking this. Like, this is, you can even do this right now on your chart. Like, these areas are areas where price is met. Notice this here happened before this. And guess where price reacted off of? Right here. The standard deviation of this. Imagine you had this marked out beforehand, before CPI. You'd have seen that happen. Then what happened here with this price? You tell me, bud. Why is it consolidating here? Why is it trading only in this range? It doesn't make sense without standard deviation, but it does now, doesn't it? Those levels match up. Now, I can't say anything about this because fucking went right through. But the consolidation right before, that's where it stopped. The -3.5 to -3. That range with the consequent encroachment. Don't forget that. The 1 to 1.5, this is like if you want a really low risk to reward because you're entering here. So like low risk to reward would be like something like this. Like you enter off here, you literally target either this or the consequent encroachment. It's very low risk to reward, right? It's literally just one candle, one move. On this one, it's one candle, but usually my strategy teaches that whatever the swing high that you drew the OT from, it's always going to get taken out. So you always want to either have a target there. Now, not usually is the swing high at the 2.5, but usually the swing high would be like around here. And so you target the swing high. That's your first take profit. Your second take profit would be up here, or you're fully out. And your third, if you want to have a runner, I would recommend the consequent encroachment of 3 point, right? Of this one, which doesn't get hit. The only time I take a 4 is if I'm doing a swing trade, which I just don't do. It's just there for knowing, oh, because this actually, like, I've seen this happen where the -4 is like right there, right on the liquidity, where there's like a market structure shift right here, and the -4 comes on here. So that tells me that there's a high probability that this trade actually turns out all the way up to -4, and that could lead me to maybe adding more to my position, leveraging more, leveraging less. You know what I mean? It tells me where the market could be going. Here, it wasn't it was near this daily fair value gap, but it wasn't in it. It wasn't near it. It wasn't at the consequent encroachment. It was just kind of in the limbo of both. So to me, in this play, it would have been risky to take a swing trade, knowing damn well that we had CPI, and we also had tomorrow we had FOMC and rates funds and stuff like that come out early in the morning and then early in the afternoon. So you do with that information, but that's what happened yesterday. I'm pretty proud of this trade. Obviously, literally can't do anything about today's trade. I mean, there was this little tiny thing happening, but I really don't want to trade this at all. You know, this wasn't even a market structure shift at all. It was just you take that swing high to that swing low, just in internal ranges and not even external. It comes back, types the OT, boom, fair value gap, just boom, bam. But even if you do this, like there's no, you can't do standard deviation on this move. There's no market structure shift. There's no, it just didn't work out. Now, where am I going with this? Oh yeah, oh, wrong one. There was nothing, so couldn't really trade on today, but it was fun. I live streamed the Jerome Powell speaking and stuff. So if you guys didn't see that, I'd recommend seeing, or at least rewatching not my live stream, but what he said. That could be important for your analysis. And keep up with tomorrow, because I'm pretty sure tomorrow. Whoops. What do we have tomorrow? Not a lot, but we do have core retail sales, unemployment claims. That could be, that's big. And then Friday is going to be crazy. So be careful. I'll see you guys tomorrow. Explain more. Hopefully see what happens. I do have exams all the way to Friday, so live trading is going to be very hard. But I'll try to do my best. I'll try to keep these videos up, and I will see you guys very soon.